Warren, it seems like you came into 2025 feeling like, the bull market is still intact, but maybe expectations were high, be a tougher to please market. And I know you've reduced your recommended equity allocation just today. So what's driving that move?
Yeah, thank you for having me. Number one, once we saw that the tariff on Mexico had been delayed for a month and the market started rallying, we thought, this is a good place to take our equity exposure down. And just to be clear, we're taking it from an overweight to benchmark weight. So we just wanted to remove our excess long positioning. That gets us in line with some of our main models. And the real reason is I just think that this tariff news is going to be around the market for a bit. There's no way to predict it. And I'm not so worried about the impact of tariffs on the economy. I'm more worried about how tariffs impact the Fed's reaction function. So to me, that's the one durable thing that we can see here is that the Fed is going to take this and be a little slower to act. I think we saw that in the rates market. So, SOFR implied rates came up while long-term rates came down. And I think that's a tough mix for the market. We've talked about it a few times. Our view is that late Q1, early Q2, there's likely to be a growth scare. And the Fed's going to need to be kind of reactive to save the market from severe stress. And so I think this takes us farther away from that. So bottom line is I think there's a lot of complacency around the Fed put. It's probably lower than the market expects. And this pushes it lower. And even the Trump put, everyone says, Trump doesn't want to see a sell-off. This early in his term, I think that he would actually be willing to take some equity stress to accomplish some policy goals.